let's move now to look at the push towards the utility-based model. You just said just now that you're only as good as your counterparty's back office, which is quite an apt way to bring us into this. So just taking a step back, what do you think the systemic risk that we saw creating the crisis, what do you think that has shown about how the industry needs to approach kind of shared functions and utilities?
Well, I mean, the most serious one is a lot of the back office systems in a house or externalized are running batch, meaning they run several times a day, which is the opposite of real time. The world needs to move through real-time processes. So if there's an issue, if a bank or an institution needs to be isolated, there has to be ways to basically kill trades and isolate the problem so that it doesn't spread out to the rest of the financial system.
Mm-hmm. Now, obviously, we have seen an industry-wide call and push towards creating utilities in other areas. So, for example, the obvious one is the credit default swap market, where suddenly all the regulators said, right, we need to push these into the light, we need to push them into a utility. Do you think that now there is a greater acceptance that this is the model for the industry?
No question. I think a couple of years ago, I think the larger banks were seeing the back office as a differentiator. I think now the trend has reverted. I think what matters is having a good back office. It doesn't matter if you own it or not. And we see a large banks very interested to move some of the process in the back office outside the utility model, like reference data management, like order matching, like affirmation confirmation. Mm-hmm. I mean, there are banks still using faxes for order confirmation, sending hundreds of thousands of faxes every month to their clients. That has to disappear. And I think the utility model will help them basically move to a high level of efficiency. Because as I said before, I mean, you're only as good as your counterparties. So if you spend hundreds of millions of dollars fixing your problem, or you cannot do about your counterparty systems.
Mm-hmm. So on the front end, everyone's very familiar with the concept of utility like an exchange to trade stock. And everyone's pretty familiar with the concept of clearing and settlement as a utility. But there's kind of this gap in between that you've just referred to in terms of the matching process and reference data and so on. Can you tell me a little bit more about, from your point of view, how do you think the industry can move towards seeing that as something that can be put onto a utility as well? And what are the challenges in making banks think in that way?
Well, for me, it's about what is the value add, what do the banks bring to the table. And post-trade processing is nothing unique. Reference data is nothing unique. Having a better closing price for IBM doesn't matter. There's only one. Mm-hmm. So I think that if you think of all the business process you have in the back office and accept that there's nothing unique about it, well, you have a bottleneck that needs to be eliminated. Right? You have very efficient clearing houses, very efficient liquidity pools, and you have back office processes that are half done by hand. You have a huge problem for the industry.
Mm-hmm. You mentioned earlier that if you could move more banks into this model, that you could do things, for example, like isolate problem banks. Right. That doesn't sound like much of a sweetener for some organisations. Can you talk me through a little bit further how you think they could take that model, and can you see the banks being too enthused by that incentive?
Well, I think it's not up to the banks. I mean, the central banks are pushing for this kind of regulation, and if they have intraday real-time tools to predict that a bank is getting into trouble, they can intervene much faster and take action. I think it just benefits the entire industry.
Mm-hmm. Okay, thinking about how you can manage the risk of a utility. So we know that clearinghouses, they will have a default pool, and the members will put up margin and they will manage that risk. If, for example, you created a utility for post-trade matching, for example, how would you manage that risk? Because it's not a kind of credit default risk, it's operational risk. Right. And are the processes around how you manage operational risk as mature as credit risk, for example? So can you give me your thoughts on how you deal with that as a provider?
We don't intend to take any positions and in terms of operational risk. I mean, there's certain banks that won't let us take over that risk, and they will retain the operational control. Mm-hmm. So you manage the software as a service. We will manage the utility, and they will still manage the operations. For other banks, we'll manage the entire gamut of operations, but we never take on any risk on our side.
But if you are, I suppose, providing a service to more than one bank, and if you're trying to sit in the middle of multiple back offices, just by virtue of providing that service, presumably you are being associated with some kind of operational risk, right?
Well, we don't. We're not really because we offer the services And again, the matching is done by the clients, so we're not taking any positions.
Okay, so you're just providing that kind of the infrastructure underneath.
That's right.
Okay,
yes.
excellent.